Welcome to Business Influencers. My name is Chris Salem. We are so happy that you're here. Again, the show continues to grow each and every week because of you, and we are committed each and every week to bringing subject matter experts that share their words of wisdom and insights to help elevate your personal success and your business to the next level. We are so excited to share that, again, the show continues to grow. And if you have any input as to any new content that you would like to hear on Business Influencers with TALRadio, feel free to reach out to us at chris@christophersalem.com. Well, we got a great show for you today. And as always, our show is sponsored by Biz Explosion Conferences. They are putting on their next event on June 9th and the 10th. It's called the Achieve Biz, B-I-Z Explosion Conference, taking place in Denver, Colorado. And I have to say personally, I've been to their events and they are incredible. They bring in lots of people, all very high quality people. And this is an opportunity to not only meet good people, but also walk away with business. I know I was there in October and I met some fabulous people and I walked away with business. And I'm excited that I'll be keynoting this event in June in Denver, Colorado. So again, if you'd like to find out more information about Biz Explosion Conferences and the Achieve Biz Explosion Conference on June 9th through the 10th, feel free to check them out at the website at achievebizconferences.com. That's achievebizconferences.com. Well, we got a great show today. We're going to be talking about flipping the script on real estate investing. And I love this particular area. And we're going to be speaking with a gentleman that brings a lot of knowledge to this particular area. His name is Robert Costomiris, and he is a highly successful and experienced financial advisor and entrepreneur with over 20 years of experience in the financial services industry. He began his career as a stockbroker on Wall Street, where he quickly climbed the ranks to become a financial advisor, managing the money of high net worth individuals, families, and businesses. He later founded a boutique securities firm and was responsible for creating the insurance division a year later, followed by a RIA, and a couple of years after that to create a full service boutique financial institution. Robert's entrepreneurial spirit and leadership skills were instrumental in growing the firm to over 150 advisors across 5 different states. With his years of experience in sales and forming relationships, he was able to build a solid reputation for his firm in the financial services industry. Now, his passion for business and finance has led him to partner with Marc Cox at MIOYM, who has been in real estate industry since the early 90s and flipping homes since 1999. As a capital raiser for their single-family residential program, Robert uses his extensive experience in financial services to bring his expertise and insights into the world of real estate and private equity. I could keep going on and on and on. You're going to get a chance to know how to reach out to Robert as well on LinkedIn, including his email and other ways that you can get in contact with him later in the show. And without further ado, we welcome Robert Costomiris to the show. Robert, how are you doing today?
I'm doing great. Thanks for having me, Chris. I really do appreciate being here today. And just by listening to the bio, you would think I actually did something in life.
Well, you did. Yeah, I always like to, really, admire our guests and all their accomplishments and everything. So, Robert, let's dig right into it. When we look at, flipping the script on real estate investing, we've heard all about real estate investing. The people out there that have flipped homes, single family homes, and other types of 2 families, 3 families, and so on. But, if you could give some general insight to those people that could be listening that maybe, while they've heard about real estate investing and flipping homes, maybe seen shows on TV and so on, talk about a little bit about the reality of what it's about, if you can kind of lay a foundation for it.
Yeah, so before I came to MIOYM, I flipped 2 houses myself, and just watching it on a day-to-day basis for the past couple of years here at MIOYM, what they show on TV is nothing like what it's actually.
Yeah, that's that's the reason why I wanted to bring that up.
When I watch it on TV, and I do like watching it because it gives you a lot of ideas for what you do in your house, and they get very creative there. But it kind of like lures me into kind of wanting to do it myself. And then, I go to work the next day. I'm like, oh yeah, it's not like that at all. There's a lot of headaches. There's a lot of, and now I'm not being negative about it. I love what we do. I love everything about it, but there are a lot of headaches. It takes a lot of time and a lot of mental aptitude, if you will, just to get it done. Because, even though you know what you want, the contractor may have a different vision. You have to take your vision, give it to the contractor, and then stay on top of them to make sure that your vision becomes what it is. And that's what we're doing every single day. And there's always bumps in the road, and there's always something there. But overall, it's fun. It's definitely in when I was on Wall Street, every single day was different. There was never one day that was exactly the same. And if it was like a holiday or something, it was quiet. It was nice because it was nice and quiet. But in real estate, same thing. We're walking in every day. There's a different problem with this house. There's a different problem with that house. I mean, we have about 27 different projects going on right now, and every day it's a different issue or problem. You can't get this permit. There's something behind a wall. Some wiring wasn't what you thought it was. So it's not exactly what it looks like on TV. I'll tell you that much.
Well, yeah, that's the reason why I brought it up. And it's so why I like to get a distinction from someone like yourself who's in it day to day. So what would be some of the things if you're looking to, there's so many different investments out there. We've been taught to, again, go out, save money, put it in a 401k, an IRA, or a Roth, or maybe you invest in some stocks. But talk about how real estate can be, also a even more important an investment for people, where now you have something tangible here we're dealing with, and it's just a matter of, well, nothing's easy. What are the upsides and the rewards of investing in real estate?
Yeah, so I could, I knew nothing about the stock market. My grandfather had taught me some things just looking in the newspaper. And for those that are younger watching this, yes, you did check your stocks in the newspaper the day after to see what happened. You didn't know on a day-to-day basis. So he would show us stuff like that, but I really didn't know the stock market. And then, I went to work on Wall Street, learned all about it. And I am one of the biggest advocates of the stock market. I love it. I think it's exciting. You can make money in it if you know what you're doing. Even if you don't know what you're doing, you could, hit a stock a blind squirrel finds a nut. But then real estate, I've come to realize, and I kind of knew this in my time on Wall Street, but, coming to work at MIOYM and everything, I've come to learn to realize that the amount of leverage, and it's not bad leverage, it's just taking out a mortgage or a loan or, borrowing money from somebody. And the amount of money that you could make is insurmountable compared to what you could do on Wall Street, comparably speaking, with the money that you're using.
Yes.
Furthermore, when I first got started, it was around COVID, and houses weren't moving. So we kind of moved to an income-based model, where as opposed to underwriting for appreciation, which is what all fix and flip people want, and that's their ultimate goal, we started moving towards an income-based model, meaning if we can't sell it, we'll get a renter in there, we'll get income into the property. That being said, come to now with Uncle Jay, our Fed president, or chairman, I should say, raising the rates like crazy. Because we went to that income-based model, it saved us with the way he's raising interest rates, because houses are even slowing down even furthermore, which I don't think it's going to last, but we can get into that.
Yeah, exactly.
If you want. But because of that, real assets are one of the best areas to get into in inflationary times. Because we moved to that income-based model, and just, the research that I've done in the time that I've been there and going into it, real assets, silver, gold, real estate, anything tangible that you can touch generally bodes well into in inflationary times. So kind of like going off your question and kind of getting into that real assets portion, it's kind of benefited us very well. And we're sitting on about 52 different properties right now, 20 of which are income bearing. The other 27 are still in works. And I know the math doesn't add up. We have a couple that are just on the market. But it's benefiting us right now.
Wow, that's great. So I love the fact that, you're able to adjust, because when you look at real estate, yes, you can, it can be an income producer on a monthly basis when you're out renting these properties to other people. Or again, prior to this, the interest rates going up, you could, perhaps buy the house, get a good deal, flip it, and make a decent profit on it. Nonetheless, there is work. There's always going to be hidden things that come up that you're not aware of, and things can happen. So it's always, to know that there's always going to be pros and cons to anything, but nonetheless, real estate is always a viable way to grow your profit. What would you recommend if somebody is just tapping into this for the first time? They're looking at real estate for the first time. Do you recommend that they go in and to buy a house and to rent it, to, or flip it? I mean, I know the interest rates are a little higher now, obviously. Or, do you recommend any other type of way? I don't know if there's real estate investment funds, that type of thing.
So it depends on how much money they have and what they're looking to do and what their tolerance is. And when I say tolerance, having tenants is a how do I say this in a very nice way? Very
I know you're saying.
interesting area to get into. I mean, you're dealing with people that may not want to rent or don't. I mean, when I was a tenant, I never wanted to deal with my landlord ever. I didn't want him in there. I didn't let the apartment or house I was in go to waste. I would always fix stuff myself or have somebody come in and fix it. But some tenants just don't want them. They want the landlord to fix everything. So if you're ready for that, then that's a good way to do it. And one way that I like to say to go into real estate itself, if you have the funds to do this, is buy a duplex or a two-family house, if you will. And what that does is you have one person renting, whether it's above, next to you, however it is, they're paying your mortgage for you, and you basically live there rent-free or basically rent-free, and you're not paying as much of it because the rent that they pay takes on most of that mortgage. That's one way that I like. I've never done that, but it's something that I wish I had done when I was younger, because then you're building equity in the property. You live there. So if there's anything wrong with the property, you could just go fix it right next door or upstairs or wherever it is. So I really feel that's a really good way, because while you're building equity in that house, while you're living there, you could start to build your net worth and get going, for assuming you're doing it as you're younger, even if you're older. I always say there's no bad time to get into something. The best time to plant a tree was 20 years ago. The next best time is right now. So,
yes.
I always think no matter what your age is, if you want to do something, just do it. But if you don't have the funds to get into a property, and it doesn't take much to buy it, especially if you're a first-time home buyer, you can get in with a 3.5% down payment. REITs and other investments within the stock market are a very good way to get into it, as well, to grow your platform or net worth, if you will.
Got it. But now, what if you say, like, you invest in a property? Like you said, if you bought a duplex, and let's say you move into one area, rent it out to the other. Now, basically that other person's paying for your mortgage, either all of it or a large portion of it. Would it be wise to, take the equity that you're building up, and then now, I mean, granted, there's debt, and then there's good debt and there's bad debt. Good debt is when you're building equity into an asset, but then borrowing against it to then buy even more assets that can continue to build equity.
Yeah.
Would you recommend that the equity that you're building in, from a situation like that would be good to buy the next property, so on, and going that route?
Yeah, and I'm glad that you brought that up, because that's what most people who are big into real estate have done in the past. Is they've gone into one property, let's say duplex or someplace that they bought themselves, maybe a smaller property, and as the equity built in it, you pull that equity out, you put it into a down payment for another property, and then you just keep snowballing from there. And it really does not take that much time to do that. Maybe a couple of years, maybe 10 years, and you could have a nice little portfolio of properties. And you could do. I have a bunch of people that I speak to that are doing it as a second job, and it amazes me that they have the ability to do that. And one gentleman that I know has upwards of 50 properties, over 1,000 doors, I think it is. He just put it on LinkedIn, and he's got an entirely separate job. And it just amazes me at how people can build that kind of, net worth or whatever you want to call it, and have an entirely full-time day job. And he's got a serious job. It's not like, somebody working at Walmart 9 to 5 or working 6 hours a day. He's got a legit job where he's, going to work for 12 hours a day, and then he's still doing this on the side, quote unquote.
Wow. I mean, granted, you got to deal with, the things with tenants and, things that could go unforeseen and go wrong. But nonetheless, when it's all said and done, imagine now you got this guy, 50 properties, and then, over a period of time, all these properties are going to be paid off. Yes, he'll have to pay for, taxes on those homes. Yes, he would have to pay for repairs. It's all part of cost of doing business. But nonetheless, if he's on his profit and loss, if he's making money, I mean, imagine the equity that he builds up in those homes. I mean, yet you're building a multi-million-dollar portfolio there.
Yeah, I mean, it's amazing. And, my father was a doctor, and he was building his practice when we were younger. So he was always busy, and he would, I kid you not, he told us every single day, do not become a doctor, do not become a doctor, do not become a doctor. Now, fast forward, my parents divorced. My father remarried and had 2 other kids. So we were sitting around one Christmas, and I think it was my stepmother's family asked my 2 younger brothers what they wanted to be. And they both said doctors. And they go, what about you, Robbie? I go, oh, I guess we were just to test children, just to get it out there, just to see how this would go. But I'm just saying this because in my father's, the beginning of his career, it was probably tough for him. It was probably very stressful. But now that it was later on in his career, it's probably a little bit easier for him. He made his own hours. He did what he wanted. And, I'm going off on a tangent, but I'm, going to the point that any career or anything that you do, there's always going to be something or some time in your career where you're either going to hate it or it's going to be so painful, it's going to suck. I don't know too many people who say that their entire career that they've loved exactly what they've done. I mean, I'm sure you could think of times in your career.
Oh, no, absolutely.
And if somebody says that they love their career, I would love to know what they do. But, and I love what I do. I'm in sales. I'm getting, doors shut on me right and left, figuratively speaking. But, and I love sales. I love it, but it's not easy. It's hard.
It's not easy. You have to have a different mindset and be patient and persistent, no doubt about it. And like you said, there's going to be trials and tribulations with anything. Like I said, at the time when you were young and your dad was young in his profession, he was probably working around the clock, getting pulled in all these different directions, not seeing the money that probably he thought doctors should be getting because he was ramping up, and he probably had all these loans that he was paying off for medical school. But then all of a sudden, he grows a practice, all his medical debt is gone, and it's like, wow, there's a lot of money coming into play here, and so again, you got to pay your dues, like what you're saying.
Yeah, and how you were saying is, with the houses, all the work that goes into it and everything that goes into owning a home, the tenant, the structure, the land, somebody trips and falls on your property, you get sued, something like that. But, in anything you do, and I work out a lot, and one of the examples I have is when you go to the gym in the morning, you can either just get up, go to the gym, get to the gym, and you're good, no matter what's going on, rain, snow, sleet. Then you have that one day where you're like, I got to get out of bed. I got to put my feet on the ground. I got to go to the bathroom, wash my face, put deodorant on, put my clothes on, get to the gym, go in my car. It's cold out. Then I got to get to the gym. So, did I lose you there? And then it just, you could build it up as much as you want, or you could actually have, a great experience with what you're doing and just go right into it.
Yeah, no, absolutely. No, I love what you're sharing here because you're stating the reality of this process. But nonetheless, like when you think about it, real estate is just something, if you look back at some people you may admire in your life, and you look back at, what they did, real estate was a part of their wealth and how they built their wealth. When you look at it, just about anybody that you may admire that has wealth, and because it's a tangible asset, it's not, yes, things could happen, anything, but hey, homes are insured. So God, if an act of God or you have a tornado or hurricane wipes it off the map, hey, there's going to be insurance involved there, and so on.
Plus, with real estate, what it does is it also gives you, it has the potential to give you generational wealth. If let's say you buy a building that's inexpensive and you pass it on to your kids, and it's just another income source that your kids have, where, what, they don't want to work at that job, they're unhappy with what they're doing, take a month off to find out what you're doing. Now, I'm not commending to do that, but it doesn't give them that stress where, oh my God, I have to go find another job today to find income to, bring into my family, or to, so that I'm worth something. So it's, it's something that you could pass on from generation to generation.
Well, I mean, this is something that, you correct me if I'm wrong. I mean, you can't rely upon one income. So when you have passive streams of income, in this case, now you have an asset or assets that are producing income for you on a monthly basis, whether if you're there or not. That's a good thing to have.
Yeah, and all that stress that, when you had to go and fix that faucet at, dinner time or something, at some point it's going to become that time where my father in his medical practice, you have your buildings, you're just like, oh, this is actually worth it. You at that time, once you get, amass a certain amount, you probably have somebody manage it for you. You could have, just a plumber go out and take a look at it, things of that, where you don't have to do it. And you're just sitting back and the money's rolling in, whether it's a lot or it's a little, whichever,
Yeah,
whatever
no
suits
doubt
you.
about it. And so right now, fill us in a little bit about what you're doing in terms of helping investors in this area, because I know you specialize in single family residential and other types, but talk a little bit about how you help people in terms of easing into this, or if they've done this before, what do you go about doing to help them make sure you get them into the right investment?
Yeah, so on a high level, what we are is we're a distressed asset private equity firm. We specialize in single family residential. That's just a bougie way of saying that we're a fix and flip firm. We have about $50 million in properties. And what we do is we'll go out and we have proprietary technology that uncovers properties across the nation. And we find properties that are coming to the market. They're not actually for sale, but they're being foreclosed on, whatever the case may be. And we'll find them at a 60% discount. And because we're buying them so cheap, generally at closing, there's equity in the property. What we do is we manage construction and everything in-house. And we have contractors go out there to manage the property. They'll go in there, fix it up. We'll kind of guide them in what we want. And then we have debt institutions provide us the capital to go out there and buy this property. They'll give us about 90% or so of the property and the rehab money.
Got it.
What we don't have is the cash or the soft dollar, if you will. And basically what that is it's the closing costs, legal fees, and any carrying costs that we may incur. And we go out there and we have accredited investors come in with us, provide us that money. And for doing so over a 12-month period of time, we give them a 17.5% return, regardless of whether we sell it or not, if we rent it, whatever the case may be. At that 12-month mark, we're returning that capital to them, their principal plus a 17.5% return.
Got it. Well, that's very good to know. And I think right now, I mean, there's going to be obviously, changes that will happen as they always do in real estate. There's always the times to get in, or maybe just kind of like park for just a bit, but always being active, always looking out for those opportunities and not sitting on the sidelines for too long.
Yeah. We feel, because we're in the distress field, that through COVID and now through the rising interest rate market that we're currently in, that we feel that there's going to be a lot of foreclosures. And I just want to put a stipulation out there. We don't put families out onto the street. We actually have taken over properties with families in them. And because we have a commercial lending division and we buy non-performing loans, we help those families get back on track. So we don't put families out there, but we think that there's going to be an influx of foreclosures coming to the marketplace just due to COVID and now the inflationary times that we haven't seen yet. And I think over the next 6 months to 2 years, that's going to flood the market.
Got it.
We should be poised to take advantage of that.
Got it. Wow, this is great. I'm so glad that you shared this information with us today. I know we're getting near the end of our show, and I want to make sure that people, learn more about you personally, getting to know you and MIOYM and all the great things that you're doing to help investors, whether people will have interest in learning more to invest for themselves, or maybe that might be able to refer people to you. Robert, what would be the best way that people can reach out and get to know you better?
I'm very active on LinkedIn. I'd say go to our website. Mark will probably kill me for not saying to go to the website, but if you message me on LinkedIn or you find me on LinkedIn, you can message me, and I'm very active on there, so I get back to everybody. But a good way to do a little due diligence into us is go to our website. It's MIOYM.com. That's mirrorimageofyourmind.com, MIOYM.com. And you can see everything that we're doing on there, the different areas of our businesses, and you can contact me through there, or go to LinkedIn is one of the best ways, to be honest with you.
Wow, this is fabulous what you're sharing. And we highly encourage everybody listening, to reach out to Robert. There's just a lot of great information that he shared here. Any final statement, in the next 15 seconds or so, Robert, you'd like to leave the audience?
So one thing I do, and it's it's what's going on in the media. It's they're saying how Uncle Jay, as I call him, Jay Powell, the Fed chair, how he's going to start easing up on interest rates, and he's not. And all I say to people is, don't listen to what people are saying. Listen to what actually is going on. And if you listen to Jay Powell, I've been through 4 Fed presidents in my professional career, if you will, and he's one of the most transparent. So listen to what he's saying. He's saying he's getting aggressive. He has no signs of slowing down, and just listen to him. Just go out there and don't go with what you think. Go with what you see. That's it.
That's awesome. Well, I want to thank you personally for taking the time out of your schedule to be with us here today, sharing your words of insights. Again, we highly encourage everybody to reach out to Robert, LinkedIn, reach out to him also at the website as well. Robert, thank you so much for being here today.
Yeah. Chris, thanks for having me. I really do appreciate this.
Thank you. And listeners, we want to thank you each and every week for joining us here at Business Influencers. Again, we are committed each and every week to bringing in subject matter experts like Robert, sharing their words of wisdom, their insights, and personal experience, always from the heart, and helping you to decide how that resonates with you to take your business, your personal success to the next level. Till then, everybody, have a great rest of your week, and we will see you next week. Talk soon.